As investors, we're used to market risk. That's the risk that if you buy shares and then the price of those shares goes down, you lose money. But there's a completely separate type of risk, which is that the investment platform on which you hold your assets goes bust itself. And in that case, can you get your money back? Now, it turns out you can, but only for specific companies and also under specific eligibility rules with certain limits on how much you can claim. So to find out how to find the companies which are protected and how big those limits are, let's find out in a bit more detail. This is not a recommendation. If you want advice tailored to your specific circumstances, seek independent financial advice. The question is whether you should split your SIPP or your ISA between different platforms. The reason why you might want to do that is because the Financial Services Compensation Scheme only offers a limited guarantee for investments. The FSCS only covers firms which have failed. If that's the case, then the FSCS can step in to pay your compensation. When it comes to investment products, these are broken down into two categories, and the first one is cash. So if you hold a deposit with a bank, building society or credit union and they're unable to repay you, then you can make a claim to the FSCS. And if you hold a joint account, then each of you is able to claim compensation. The protection only applies if the company is authorised, and later on we'll see how to check that. The other category is investments. Again, the company has to be authorised, and protection's triggered in two cases. The first is if you have bad investment advice, or if the manager does a poor job of managing investments, or if in their advertising they've misrepresented the product itself. The second is when an authorised investment firm can't repay you because it's gone out of business. And these risk-based investments would include things like stocks and shares, unit trusts, futures, options, pension plans, and long-term investments like mortgage endowments. The compensation limits also depend on that categorisation. For cash-based products and deposits, the limit is £85,000 per person per authorised bank, and that doubles to £170,000 if you hold a joint account. For investments, the limit is £50,000 per person per firm. And for pensions, as you'd expect, the limits depend on the type of investment. So cash, again, is £85,000 per person per firm, and £50,000 per person per firm if it's a risk-based investment. Notice there are two cases on the right where you're 100% protected. The first if you've got retirement income starting to come in from a life insurance contract, or if you're building up a life insurance contract investment. And the second is investment life policy savings, where there's some built-in life insurance in the product, and a typical one might be an endowment policy. The investment claim limit is going to go up from £50,000 to £85,000 if the default occurs on or after the 1st of April 2019. Now sometimes you may have a very high balance because you've been paid out a large sum of cash. And to cover that eventuality, you get protection up to £1 million, but that only lasts for 6 months. And an example of that might be if you sell a property or if you have an insurance policy that's just paid out. In order for your claim to be eligible, you must satisfy certain criteria. And notice that you have to satisfy all 4 of these criteria. If you fail to meet one of them, you won't be able to claim compensation. The firm must have failed and must be unable to return your money. The firm must have been authorised at the time you transacted with it, and you must have suffered an actual loss. And I'm assuming that the people who watch this will be private individuals, not businesses or charities. If it's an investment, you won't be covered if it's just fallen in value. So if you'd bought shares in Superdry and it fell by 76%, you couldn't claim that back from the FSCS. Or to take a more extreme example, if you'd bought shares in HMV, which then went into bankruptcy, you couldn't claim that money back from the FSCS. It's a risky investment, and taking the risk of loss or bankruptcy is just part of investment. Now, if the firm is authorised, you get a very important form of protection through segregation. Segregation of what? Well, an authorised company has to keep your cash separate from their cash, and the regulator calls your cash client money. For example, if you put money into an ISA, before it's invested it sits there as cash, and if you hold stocks they may pay out a dividend in the form of cash. Again, that's held inside the ISA, and that's your money which the company calls client money. Once you buy your assets inside an ISA or a SIPP, those are called client assets, and they must be held separately from the assets of the investment platform. The Financial Conduct Authority has a handbook, and one of the rule books in that handbook is called CAS, which specifically talks about protection of client assets and money. And it's very clear that when you pay in client money, the client money has to be paid into a client bank account. What mustn't happen is for your money to go into the firm's own bank account and then be separated. And this is to protect your money in the case of a default. So what's yours is yours, and what's the firm's is the firm's. So when you put your money into an ISA or a SIPP, initially it's held by cash on the platform, but kept separately from the firm's cash. And then the fund manager or the investment platform will issue trade instructions to a trustee or a depository, which then holds your assets. But the key thing is that you retain ownership of those assets. They don't belong to the investment platform, they still belong to you. And that means if the investment company does default or go bankrupt, it's still possible for the trustee or depository to sell the assets and return the money to you. For example, if you look at the Hargreaves Lansdown website, they make it very clear that you will always remain the beneficial owner of your investments and assets, because they have to maintain detailed records of ownership, and those assets are held by an approved third-party custodian. Another requirement for an authorised financial services firm is that they must hold a minimum level of capital, so that if they do become bankrupt, the administrator will have enough cash to cover its cost. If for some reason that cash is insufficient, then in theory, the administrator could sell your assets to pay its fee. If that's the case, then you may be able to file an FSCS claim up to the value of £50,000 for each investor, or from April 2019, £85,000 per investor. And you'll find a similar statement on most investment platforms. Here I've shown the one from Vanguard. If the firm's authorised, you may still be able to complain and get some compensation even if the firm hasn't gone bust. That's the purpose of the Financial Ombudsman Service, or FOS. You'll see their number in the top right here. Your first port of call will have to be with the company against which you want to make a complaint. Authorised companies must give you a response within at most 8 weeks. And if you're still unhappy with the response, you can get in touch with the FOS, either online, on the phone, or by post. They'll investigate it and they'll give you a decision. There can be one more stage of appeal if either you or the financial services company aren't happy with the FOS's decision, and then you'll get a final decision. And remember, this only applies to authorised companies. If you want this FSCS guarantee, or the ability to complain to the FOS, then it's good to know how to check if the firm you're dealing with is authorised. The Financial Conduct Authority maintains a register at this website, so you can check a firm to see whether it's authorised. Let's check it out. Let's see if Vanguard is authorised. And you can see that yes indeed, Vanguard Asset Management is authorised. And you can see the status column on the right hand side. Sometimes there's more than one subsidiary of the company which is authorised. So here we've got both Vanguard Asset Management and also Vanguard Investments. Hargreaves Lansdown, the very popular investment platform, is also authorised. Here are the fund managers, and you can see the status column is authorised. Now there's something you should be really careful of, which is the name of the company sometimes gets cloned by a company that's trying to steal your financial details. So here you can see Hargreaves Lansdown clone. Let's click on that to see what it means. Now this is not authorised, even though it's got the identically spelt name of company to Hargreaves Lansdown, the valid investment platform. And you can see the warning from the FCA saying that the company's carrying out regulated activities without authorisation, or it's running a scam. And furthermore, you won't get compensation if you deal with this company. Sometimes a clone firm will actually copy the firm registration number from the company which is actually authorised. That's how convincing they can be. And what the FCA recommends is if they call you, make sure you call them back, but use the number from the FCA register, not the number they give you or the number they called you from. If you hold a cash deposit, you may also want to check out this website, which will tell you if your money is protected. So let's say we hold £85,000, but it's with two separate companies, Halifax So let's see whether we're protected. This might be surprising. Not all of our money is protected, even though we split our deposit amongst two different providers. And the reason why is that both these companies share the same banking authorization. And as financial companies merge, it may be that more of them are covered by the same authorization. So it really pays to check with this website. If you're really paranoid, you may be worried that the FSCS will itself run out of money if large numbers of claims are filed. If that's the case, you may want to check out the annual report and accounts which are published on the FSCS website. Here they list their income, but also the claims that they receive every year. In 2018, their income was $578 million, and the way they're funded is that authorised companies pay them money. And they paid out a huge £445 million in compensation in 2018. And that was partly due to claims against independent financial advisors who had advised their clients to take existing pensions and put them into SIPPs, which in itself isn't a problem. The problem was the type of investments which they'd been advised to take. These were often high-risk, non-standard asset classes. So this might be things like vineyards or foreign property, which are very difficult to price or buy and sell, and some of which became insolvent. Another thing you might be worried about is the probability of success with your claim. The statistics for the uphold rate is also given inside the annual report. So here you can see that for investment intermediation claims, about 3/4 of the claims were upheld. And for the 3 SIPP operators that were declared in default, 81% of the claims were upheld. And it's slightly worrying that the FSCS expects a notable increase in claim volumes in the coming year. So it's very unlikely that your investment platform will go bust, but there are certain types of protection if your company is authorized. And it's very easy to check whether that's the case. And if you have cash rather than risky assets, the protection limits are different at the moment, but they will be the same on April the 1st, 2019. So it might make sense if you have a very large amount invested and you're very paranoid to split your investment between different platforms so you can guarantee that you'll be made whole if there is a succession of defaults with investment platforms. However, personally, I think that market risk is much more important. If you found this video useful, and many people tell us that they do find them useful, don't they, Ted? Then consider supporting us on Patreon. For $5 a month or more, you can get access to our live Q&A session every Sunday evening, and you can ask any question you like. If you go to the $10 a month level, you can also get bespoke correlation analysis on the funds you're interested in. And if you go to the $15 level, then every month you can have a power hour with me in a one-to-one session where we can discuss any finance topic that you like. And of course, I provide education, not advice. So it would be lovely to see you there. And as always, thank you for listening.